All right, everyone. Well, my clock says noon, so I think we're going to go ahead and get started. First off, thank you all so much for being here. So, we are really excited about this training today, and it should be a fun time. So, you are all muted right now. I will unmute you periodically throughout the training to ask questions, things like that. But for right now, you are muted. If you do have a question right off the bat, go ahead and click on the little chat window. If you hover over the Zoom part of your screen, there is a More section, and you can click on Chat, and you can submit your questions there. If you are having any trouble viewing the presentation, we do have a number for you to call. It is on your screen right now. So we'll kick it off. My name's Heidi Garvin. I'm with Grow Nebraska, and part of my job is that I get to facilitate trainings like these. So for those of you who are not Grow Nebraska members, Grow Nebraska is a 501c3 nonprofit that is all about education and promotion and market access for small Nebraska businesses and growing Nebraska businesses. So one aspect of that is providing trainings like these that are free and open to the public, but we would not be able to keep them free and open to the public without the help of our amazing sponsors. So we do have on the call today our sponsor for the day, Dawson Public Power. We have Dave. Let's see, Dave, I'm going to get you unmuted here.
Yep.
Oh, awesome. I think we can hear you.
All right. Thank you. I appreciate this very much, Heidi. It's great to be part of this. I am Dave Bailey with Dawson Public Power. We're based out of Lexington. That's where we're headquartered, but we serve up and down the interstate, basically from west of North Platte to east of Kearney, and we have about 23,000 accounts that are out there. Residential and irrigation are our two big accounts that we have out there, but we have a huge base of small businesses and all the way up to some very large industrial customers. So we've got a pretty diverse family of accounts. We are part of what I consider the Nebraska Public Power District family. That's where we get the bulk of our power from. And so as that partnership goes from most of the state, most of your power districts across the state have access to a lot of these same services that are out there. I wanted to say that Dawson Public Power, we're involved fairly heavily with economic development, and in my role also with key accounts. As part of our economic development, we get involved with the NPVD and recruiting large things, but most of my job deals with our small communities and our entrepreneurs and small businesses that we have out there. And it's been really exciting to see some of the growth out there with some of those industries that are happening. Dawson Public Power is excited to be involved with a revolving loan fund. We got involved with that over 10 years ago, and we currently have also partnered with the Nebraska Enterprise Fund to work with our revolving loan fund. So we've been excited to be part of a lot of revolving loan funds, not only in our area, but across the state through the Nebraska Enterprise Fund. I also wanted to say I'm excited about what John Ecklund is going to be sharing with us today. I know tax season. I just finished my taxes a little while ago, and my son and I have a small business in addition to my work, and I find it interesting some of the things that he's going to be talking about. I will say that while not everybody can afford to hire or have on staff a professional like John, I think it's very important for all small business owners to get help in this regards, because we've seen from Dawson's perspective many very successful companies that have grown their businesses and have done very well, but they've had that professional help. And I've also unfortunately seen a number of businesses struggle, and if they don't have that help, it can be really difficult to negotiate and make your business grow and be successful. The other thing I think it's really important with financial professionals like John, if you're looking for accessing capital to grow your fund, whether it's trying to find other investors, but in most cases it's finding loans, you need to have a strong set of financial information. I'm not saying you have to be in a strong financial position, but that information is so important because from our perspective, the Nebraska Enterprise Fund and our revolving loan fund, we're not always out there looking at the working or at the collateral positions, but we're looking at stability for business to cash flow. And if you don't have solid numbers that can show how your business grows, that's the roadmap that we look at for doing that. So at this point, I'm going to turn it back over, and I thank you for our opportunity to be part of this program today.
Yeah, well, thank you, Dave. So, like I said, trainings like these would not be possible without the help of our amazing sponsors like Dawson Public Power. And we absolutely love working with you. We're excited to see more with your partnership with the Nebraska Enterprise Fund. They're also a big friend of Grow's. So, we can't wait to see how you help bring success to these Nebraska businesses. You already do so much. So,
Well, thank you.
yeah. So just a couple more things, and then we'll turn it over to John. The reason we're all here today. First off, we do have these trainings for free every single third Thursday of the month. You can register at grownebraska.org if you go to our training page. It's right in the header. Just click on training. You'll see all of our upcoming trainings. So we do have an upcoming Google training as well on April 24th. Our next third Thursday training is going to feature Ali Schwenke from Simple Strat. So she's going to be talking about marketing solutions for your business. And then for members, we do have a free training every single month on the first Friday of the month. Now, our upcoming training for exclusively for members is going to be on making your social media more manageable, easier to actually maintain. Because as small business owners, you know, we all wear a lot of hats, and time is our most valuable resource. So we want to make sure we're saving you time, but still being effective with our social media. So if you are a member of Grow Nebraska, feel free to join in there. Then Grow Nebraska is celebrating 20 years of serving Nebraska businesses this year. So we are celebrating, if you stop into our store in Kearney on the 20th of each month, we will be having specials. So this month, if you stop into our store on the 20th, you will get a free tote bag and you'll get a free copy of Nebraska Life magazine. I already mentioned our training webinar on April 24th. I do highly recommend signing up for this. It is free, and it's featuring Paige Cahill, who is a national trainer for Google. So she is going to be talking about tips for measuring your online success so that you can make sure that what you're doing online is actually worth your time. I also want to have you save the date. I know this is a ways off, but MarketTech 2019 is already scheduled. It's going to be April 3rd, and we've already set a special for Grow Nebraska members. Grow Nebraska members can get an exhibitor booth for only $98, and that includes 2 registrations. So save the date, be sure to register. This is a great opportunity for you to stay on the cutting edge of marketing and technology opportunities. And now, please bear with us. We will get the screen switched over to John. And John, I'm going to unmute you.
Thank you very much, Heidi.
Yeah, thank you for being here today. John is our amazing expert from the day from CFO Systems, and we're excited to have you here.
And I'd also like to give my tip of the hat to Dave with Dawson Public Power. I live up here in Holt County, and we had a really, really nasty storm last weekend. And Niobrara Valley Nebraska Public Power did an exceptional job. They're just working their tails off, getting the power restored to not only Atkinson, which was out of power for 48 hours, but all to the outlying farmers and ranchers who are still out of power and probably will be for a while. But they are doing a super job to get everything back up to snuff, and we really appreciate their efforts. So let's see if we can get these screens going. And there we go. Anyway, it seems like We just finished this tax season, and now we're already talking about
John,
tax season. Yeah?
real quick, John, I'm going to let you know I can't see your screen. So you might have
Okay.
to hit that button again.
Which button?
The share screen and then click on your PowerPoint.
Well, do.
We'll see if we can get it up. Well, it looks like we're having some technical difficulties here, but we'll get this sorted out momentarily. So it looks like John's hopped back on. Perfect. There we go, John. And we'll have you pull up the PowerPoint. Awesome. All right, I'll let you take it away. Well, actually, give me just a moment. I'm going to make sure you're unmuted. All right, there you go, John.
There we go. Okay. Sorry about all that. Anyway, we're now in the talking about next year already. And it seems from my experience, one of the major reasons we keep books is that we record our income expenses, and then that will determine what we need to pay in our fair share of taxes. So I'm going under the assumption that most of you file your taxes on a cash basis with a tax period ranging from January 1st to December 31st. And a cash basis accounting is basically you record your income when the funds are deposited into your banking account, and the expenses are recorded when you write a check and they are dispersed. We'll talk a little bit about accrual accounting later on. But a spreadsheet, that's a remarkable tool. When I first was in school and got out of school, I used an old-fashioned 14-column paper spreadsheet, and it was a pain. It seemed like I went through a lot of pencils and a lot of erasers and still had problems getting everything to balance out. Well, the first spreadsheet that I happened to work on had a maximum of 66 lines and a maximum of column up to AZ. There was no tabs. I could only hold 15 spreadsheets on the computer, but I thought I was in hog heaven compared to those 14 columns. Presenting slides, Excel sheets and stuff on a PowerPoint, it gets kind of boring and the numbers are hard to read, but I want to just to show you a couple little things on the spreadsheet that you'll be seeing. I have an actual column, a forecast column, and if you need additional details, I can send them off to you later. The reason I use forecast on the column instead of budget is budgets kind of present a fixed amount. One example that I've heard is people go through the year and have a, let's say, $1,000 budget for pencils. And they get to November and found out they only spent $500 worth of pencils and they still have plenty around. But if I don't spend another $500, I won't be able to justify a $1,100 budget next year. So they go out and buy another $500 worth of pencils, even though they don't really need it. Personally, I like to use the term forecasts simply because, like the weather, circumstances change over time, and my predictions may be accurate and sometimes they're not. In this particular sheet, very basic, very simple. You can add and subtract whatever you need. I got a basic income flow. I got a basic outflow flow. And down here at the bottom, I have a quick one-shot reference of tracking the cash at the beginning of the month and what our cash balance is at the end of the month. I also have a line of credit sheet that we can look at what our loan to the bank is. And you can adjust this or have fun with whatever you want to add or subtract. You can have things like inventory balances, accounts receivable balances, anything that might help you at a quick glance see what your company is doing. I work for a winery in Soledad, California called Han Estates. We actually did a 10-year monthly cash flow using spreadsheets, and we not only did the simple basic what you see here, but we went down and tracked all the way down to the individual blocks of grapes that we grew, as well as what the winery actually produced. It was very intense to start up, but once we got it managed and up to snuff, keeping it going every quarter was really not that big of a deal. And it sure helped a lot, because not only did it show us where we would be at each individual year, but 5, 6, 7 years down the road, when various changes in the operation occur, we could really see where our financial needs would be that we wouldn't have otherwise. And it eliminates a lot of surprises. Now, the numbers that you see in this cash flow, they're artificial. They have absolutely no meaning at all, but is being used as just as a visual aid to see what's going on. Like right now, you'll see that there's an income down here of $41,880. Here is a whole basic spreadsheet. I got columns for actuals, columns for forecast, all the 12 years. And they're all linked up by formulas over here to the side. And you notice that I got actuals up to May, but there's nothing here in June, July, and that's fine too. Because what we can do is we can hide columns that we're not using at a particular time, and by reformulating and copying over to a different spreadsheet, we can see the actuals and forecast models, so that like here in the end of May, we have a total income of $212,000. We forecasted $200,000, but we actually spent $244, but we forecasted $222. And like I said, the weather forecast comes in, and sometimes we were high, sometimes we were low, but that's what forecasting is all about. Now, for some reason, just out of curiosity, something happened in June, just to play along, and we decided to sell all of our corn and soybeans. So what will that do to the cash flow? Well, we can actually put in our actual numbers and retabulate all of the forecasts for the rest of the year, combining actual and our new forecast models. And the way we do that is copy our original spreadsheet over to a different sheet, and we can change what we listed before as actual. We can change that heading to, let's say, forecast number 2, and it'll recalculate what our projection balance would be. So like right now, if everything came to snuff, we would have like 100,000 as net income. And we have to keep in mind this is on a cash basis. When we would look at an accrual basis, we have to remember these numbers up here are from last year's crop. This number here is from this current year's crop, but we probably also have some corn and soybeans still in the grain bins. So this 102,000 is to a certain degree a little misleading, because we have crop investments in all this area here. So what is our actual income? Well, if we look at this income, okay, we got $175 in income. We're thinking roughly we got 439,000 of expenses. So you're thinking, well, we got a loss, but we have approximately, let's say, 300,000 in the grain bins. So the whole farming operation for the year, we actually made a little bit of money, not much, but a lot. And you never go broke when you make money. But on a cash basis, we would be paying taxes on like 97,000, and sitting down and talking to our tax preparer, we decided, well, we really don't want to pay that much income on taxes. So what do? Well, we can go out and prepay, let's say, some fertilizer, herbicides, and seed, and that'll reduce our income to about 40,000 again. So that's part of the differences between accrual and cash. You know, you can play those certain kind of games. And what I would, to say which one works, well, that depends. I would not base my business decisions solely on what the government has for tax codes or for government programs, because what the government giveth, it can also taketh away. I had a co-worker of mine back in California. She purchased a home under these special programs that were geared for minority people. She bought a house with zero down, interest-only payments for 5 years, and she qualified. Well, her interest payments were $30,000 a year, but she only made $42,000 a year. And when I heard that, I just kind of went, oh, and told her that, you know, she could be running into some kind of problems. Well, fortunately, after a couple months, she realized she was, and she was able to sell her home before the housing crash, and she was able to recover her money. But when you hear stories about housing crashes in California, that's one of the reasons why, was they were able to loan money to people who flat could not afford houses. Now, some software, you are able to run reports either on a cash basis or an accrual basis. And it is insightful, like we did on those earlier cash flows, to see what the differences are. Now, I was a controller for a family operation out in California called Prudent Produce. They grew broccoli, cauliflower, tomatoes, and other vegetables, and they also packed $1.5 million worth of, or 5.1 million boxes of tomatoes that weighed 25 pounds. Well, for tax and cash flow purposes, we used a cash basis on our reporting, but when we went into our accounting areas, we used an accrual-based accounting. And that way we could drill down to the various blocks of tomatoes, cauliflower, broccoli, and look at each block and determine which blocks and which veggies were more profitable. And by putting that all together, we could actually go back and look at our planning schedule, because there were some areas where broccoli did quite well at certain times of the year, and some areas they didn't do quite so well. And there were some areas where cauliflower did quite well, but tomatoes did not do very well at all. This is the information you can coagulate together with, and it does not show up in a balance sheet or an income tax statement. So what type of method, cash or accrual, is best for you? Well, that depends, and that's where you need to huddle with your tax guide to determine what's best. And there's actually no law that says that you can't do both. Like we did at Prudence, we filed our taxes using one method, but we kept our standard general ledger using a different method. And it helped out, and it made a lot of sense, and it improved the company. So all this stuff requires time, and you as a business owner, you're expert in a lot of things. All this stuff: accounting, environment, operations, benefits, financing. I can hear all this agreement that you know all about this stuff, and you do make your to-do list. You do it every week, but it just seems like, well, your bank reconciliation or your tax return, well, they're number 5 or 6 on the list, and they just seem to stay that week after week after week. So what do? Well, then you need to look at outsourcing, and whether you do that or not, you're already, or unless you realize it, you're already doing that. You're already out doing your outsourcing your taxes, probably outsourcing your legal work as well. You're looking at insurance. You're outsourcing that as well, simply because, well, you rely on the experts in that particular field to give you the best judgment and advice as to cover your business, to make it profitable, and keep it out of danger. So what does a CFO do? What does a controller do? Well, a CFO is responsible for managing the financial actions of a company. They look more at the long-term situation, your 3, 6, 8, 10, 12, 24, 36 months out, and working with that. A controller, well, we look at the financial condition of a company at any particular time. It can be daily, weekly, monthly, and as a controller for most companies, we do venture into what would be called the CFO territory, going out and looking at the broader picture of things. Generally speaking, controllers and CFOs do not do clerical work, so to speak, but it seems like we do a lot of times as well. Now, the CFO, controller, other professionals, they can free up the manager, owner's time, so you can concentrate on your core business. You know, the owner may have a great idea to build a better mousetrap, but a controller can sit down and concentrate to develop the financial end of things to make that mousetrap come to fruition and get it back up on the market. And not only can we provide a different insight into your operation, other personnel as well too, like your insurance broker or your lawyer, we can help you out by asking a very simple question: why? Why do we do this process this way, or why do we do it that way? That's not necessarily an acceptable answer. Going back to the produce company, when I first started with them, we were always planting tomatoes in the San Joaquin Valley, February 15th. Not only Fruit and Produce, but 4 other packers in the area. We always started planting tomatoes at that time. We would plant about 10 acres of tomatoes, because when the tomatoes became mature and harvested, that was about what our packing house could handle on a daily basis. But it just seemed like year after year after year, we get close to Memorial Day, when those first tomatoes were ripe. Not only were those first 10 acres were ripe, it seemed like 40, 50, or 60 acres were all ripe at the same time. Well, there was no way we could handle that kind of volume. The market could not handle that kind of volume, so the price went in the tank. So we wound up walking away from a lot of tomatoes that were still out in the field, and at that time, the growing costs were about $2,500 per acre. That's a lot of money. So I asked the owners, I said, well, why do we do this? Why can't we just forget about the first couple weeks of what we originally were planning and start planting, let's say, March 1st? And then that way, when the tomatoes became ripe, we didn't have all the 30, 40, 50 acres being ready at the same time. We just have our 10, 12 acres that we can handle and save a lot of money in growing costs that we would normally have expensed. They kind of looked at me and, oh, next thing we knew, that next year we started planning on March 1st, and we didn't have the big slug of problems that we had in the past. And we wound up saving close to $300,000 just by doing that one small thing. Just as a side note, tomatoes, we'd only go through the field once. Cauliflower is the same way. Sometimes with broccoli, we would go through a tomato to harvest 3, 4, sometimes 5 times before we'd have to plow it under. It's just one of those interesting things that people don't normally think about when they're buying your broccoli or cauliflower at the grocery store. Opportunity cost. This goes back to good old-fashioned microeconomics that we took in college. Opportunity cost is what is the best choice. Some things we like to do, some things we don't like to do, but we make a decision on what we do with that will produce what we want to do. So what would you personally rather do? Develop a new product line that would be a surefire hit? Or would you like to reconcile a checking account? Would you like to fill out EPA forms? Or would you like to have fun with family? So by outsourcing, you can have time to maybe develop those kinds of things. Here at CFO Systems, our firm is headquartered in Omaha, and we have clients located in all the major cities, and we have directors, which I am one of them, but I'm not in the major city. I'm up here in Atkinson, and our specialty, our big bulk of business, is strictly small business owners, entrepreneurs who cannot afford a full-time controller, cannot afford all that extra, cannot afford all the extra associated costs associated with it. Our directors, we come out to clients, but a lot of times we're able to accomplish a lot of the work over the internet. For instance, my office is right in the basement of my home, and I'm able to reach out and do most of the work with my clients right here. But I do go out and see them whenever possible or how often they need them. Now, just because today you say, oh, great, wonderful, I need to talk to John, and I'll talk to you, and we get together and we talk, and if we determines that, maybe I don't have the expertise needed for, let's say, hospitals, but one of the other directors in the firm have, well, I may hand off your account to another director who has expertise in that field, and he will take it from there. Now, just because he may do all the normal daily work, I'll still keep in touch with you simply because we like to have at least 2 people who are familiar with a client, and it's just in case. It's a little subtle insurance for you. Going back to fruit and produce, it was owned by a father and 2 sons. And one day I came to work and I got a phone call and found out that the youngest son dropped of a heart attack that morning at the age of 42. He did not come together and put together a plan in case something happened to describe what he did, when he did it, and why he did it. So something like that is real personal to me, and all the other firms that I work with, all the clients that I work with, I highly encourage them to put together a what-if plan. I don't necessarily need it, but whoever is managing or running the company, if something happens to them in the future, it makes things a lot easier. The deal with fruit and produce was not fun. It was not easy. I hate to say this, leave this on a bummer note, but here is some of my resume where I have been, what I have done. You can see most of the stuff that I've done has been in California. We were out there for 24 years, moved back to Nebraska 10 years ago. I was born and raised outside of Omaha. And I would be more than happy to talk with you. You can give me a call here at my cell phone. Yes, that is a California number. Here's my email address. And if any of you are in Lincoln for the spring game this Saturday, CFO has a tailgate inside at the Embassy Suites in the Chancellor Room starting at 8 in the morning. Feel free to stop by and say hi if you're in the area. Don't be afraid to call or email me. We can get together and chit chat what your needs are, how we can help. If it works out, fine. If not, we can go from there. So Heidi, I'll turn it back to you. And if anybody has some questions, not only about what CFO does, anything about produce. I know there has been a recall on some romaine lettuce. If anybody has questions on something like that, how it works. If anybody's going to California to see Disneyland, if they have questions or want some ideas of what to do besides Disneyland, I can help you out. So go ahead, Heidi.
Awesome. Well, John, first off, speaking of that E. coli outbreak with like the romaine lettuce and things like that, what do you recommend to your clients so that they're financially prepared for things that come up like that? You have your, the list that you talked about for if there's an issue, if somebody passes away or things like that. But what do you recommend if like an event comes up like that they're still financially stable?
The big thing that the produce companies have is they go to the larger insurance brokers, and the insurance brokers, they will look at the operation and suggest certain things like recall insurance. They will ask you what your recall policy is. Do you have a mechanism where if something comes up, how do you recall the product back from the grocery store, wherever it is? They will help you, guide you through that process to develop a recall program. They will point you to the right directions for insurance products to help defray the costs. They can be some fairly high deductibles, depending upon the risk involved, the dollar volume involved. But a number of years ago, there was a recall on some spinach, and this certain produce company had to pay out millions of dollars. But because of the insurance company, working with the insurance companies, most of that was covered by insurance funds. Premiums were very high, can be very high, but when you replace 55 kidneys, that dollar amount is quite high to begin with. So that's why you need to talk to your insurance company, talk to them about what you do, what your plans are, and they will help you through this kind of thing.
Awesome. And you talked a bit about forecasting. I know that can be pretty intimidating to a lot of small business owners who've never done that before. Do you have any just general tips to keep in mind when you're working on that?
I like to look at the past history, extrapolate from there, and sit down with the people and say, okay, what are you looking for in the future? And we can go from there. That's the fun thing about spreadsheets. You can do a lot of what ifs without putting things in concrete.
Got it. Awesome. Well, and awesome information, awesome stories, by the way. I am going to go ahead and unmute everybody. So if you have any questions for John, feel free to jump in.
John, this is Dave Bailey with Dawson Public Power. We have a lot of small business owners here in rural Nebraska that are aging up and they're looking towards retirement, and they've done a good job managing their business for many years, but they may or may not have somebody to transition the business over to somebody else. But with their accounting over the years, they've always tried to reduce their taxes and their tax position out there. And all of a sudden they want to sell that business, and A, it doesn't look profitable. B, it doesn't look like it's something a bank would want to even finance based on those records. How far out should somebody look at their financials years-wise to position themselves to sell their business so it's more profitable and attractive for financing?
I'd go at least 5 years. And one of the divisions of CFO Systems is mergers and acquisitions. And they can help that particular client of yours to not only look at the past history, to make a listing of the what ifs, to make it look more interesting and appealing to potential borrowers and finances. It would also be wise to, I would seek advice of a succession planner. CFO Systems has a networking system where we know people that are experts in that kind of area. We don't necessarily, we don't get anything out of it other than to help the client, but we can do the networking and get them involved as well to make the succession and the changeover a lot less painful.
That is awesome. Yeah, that's a big question right now. Great question, Dave. Anybody else have questions for John? And if you're like me, usually you think of the questions, about 15 minutes after we hop off the call. But I will be sending out an email, though, with John's contact information. You do have it on your screen right now. But if you don't get it written down or you forget it or lose it, you will be getting an email with that information as well.
Well, I thank all of you for paying attention and listening to what's going on. I hope you have a very, very profitable year.
Well, thank you so much, John. This was an amazing presentation, lots of great information. And thank you, everyone, for joining us today. So I hope you have a wonderful rest of your day.
Thanks, Heidi.
Thanks.
Thank you.
Have a good one.